It's a way for you to streamline your cash flow so that you end up with more money left at the end of the month. And also so that during the month you have more time. So you're not constantly thinking about your cash flow, you're able to streamline it. So I'm going to go through many tips and tricks today for how you get to a streamlined cash flow. I'll probably talk for about 20 to 30 minutes and then we'll have time for questions at the end. So if you can write your questions in the Q&A box, those will all get answered at the end. So the first thing I'm looking at when I look at cash flow with someone is we're trying to get to this ideal cash flow allocation. And just to be clear, no one ever actually gets to this ideal allocation, but that's the goal we're going for. And having that goal sort of gets us in the direction where we want to be. So this ideal allocation is that about 50% of your take-home pay goes for needs, for necessities. About 30% of your take-home pay goes for wants or your discretionary stuff, and about 20% goes towards savings, split between short-term savings and long-term savings. So we're going to talk about each one of these in more depth. So first of all, let's talk about the main piece, really the one that is most important for people, because you got to make sure you have money to pay for the things that you need to pay for when they are due. So needs or necessities are things like rent and mortgage, your groceries, utilities, your insurance, whether that's, car insurance or health insurance, your medical expenses, your transportation, whether that's a car or, taking the bus or BART, paying your loan payments, whether it's student loan or car loan, whatever it is, and then paying property taxes if you already own a house. So that's the main piece, the 50%. The next piece is the 30%. So this is more of your fun stuff. So this is your discretionary stuff like dining out, gifts, travel, entertainment, clothes, books, since we're doing this at the library. And then if you're part of a couple, some fun money for each person. It's really important that each person, if you're managing money in a couple, that each person has some money that they get to decide what's important for them to splurge on. And then last, but definitely not least, is ideally 20% of your take-home pay will go to savings. So the most important thing is a cash reserve, which some people call emergency savings or rainy day savings. And ideally, this is going to be 6 months worth of expenses. That's like what you're trying to get up to. Also for savings, you want to be saving towards retirement savings. So this can include pre-tax contributions you might make at work. For some people, they're going to be saving towards college for their kids, or they're going to be saving to buy a house. And then just a note that if you are making more than minimum payments on your debt payments, that also counts towards savings, and that's an important thing to do. And then just a little plug at the end. For young adults, I always like to say when you're starting out, it can be really hard to save 20% of your take-home pay. I mean, honestly, that's true for many people. So you'll see I mentioned it a couple times today. Just start out with 1%. Even doing 1% of your take-home pay to savings is way better than doing nothing. And then, try to build up to 5, and then maybe you'll be able to go from there. So let's talk about, I just said what the ideal allocation is. How do we get to that? So that's really going to be the heart of what we talk about today. How do you get to this ideal allocation? So I'll go through each of these bullet points in more detail, but we're going to use, I really recommend using automation to make it easier to have money available for your necessary expenses and for your savings. So for your needs, that 50% of needs and the 20% going to savings, ideally that is all going to be automated, because that way you make sure the money's available. And we'll talk in more detail about how to do that exactly. And then on the 30%, we're going to talk about some different ways to make it harder to spend money that you don't really want to spend, so that you end up not buying stuff you don't really want to buy. So we'll go through those. We'll also talk about eliminating recurring expenses that you don't fully use, because that's just wasted money. That's like a real opportunity to get some money back. And then we'll talk about, if needed, you can use, there's an old envelope method, which is how people used to budget their money. You can still do that, or you can use digital envelopes. And those are different ways to guide your spending if you're feeling like you need more guidance, that it's not just happening on its own. And then towards the end, we'll talk about just some easy ways to get some passive income and a little bit of it discounts to help your cash flow. And then I said I was going to say this many times, don't worry if you don't get to that ideal allocation. So the point is to just make things better. Just start improving, and then you'll just keep improving. And so this could be a multi-year process. Honestly, it could be a lifetime process, but it is success if you just make it better, even if it's just a little bit better. So you'll see I say that multiple times. So let's talk, first of all, a couple slides here about automating the things you want to have money for. So this is automating your necessity expenses and automating your savings. So I recommend you set up automatic, if you have debt payments, that you set up automatic every month. Your debt payments get paid automatically. I also recommend setting up automatic, like if you have mortgage, that automatically gets paid every month. Those are your fixed payments. If you just do that automatically. And then a lot of times people will get sort of thrown off course by periodic expenses. And those are things like, I often use car insurance as one. You know, your car insurance will be due every 6 months. And I'm going to use a really easy example to make it clear. So say your car insurance is $600 due every 6 months. Well, when you get that bill, many people are like, oh, I don't have $600. But if you take a dedicated savings account and you automatically transfer $100 in there every month, then every 6 months when the bill comes due, you have the $600 available. So that's what I mean by a periodic expense. And then for savings, you've probably heard this, pay yourself first. That's how you pay yourself first, is you set up an automatic payment to your savings account every single month, so that you're building your cash reserve, you're building your retirement savings. So that's the first piece on automatic payments. And just to kind of repeat it again, that for each one of those things I talked about, setting up automatic payments, you want to set up automatic payments for your debt payments and for your fixed payments. So again, this is your paying your credit card balance in full each month automatically, making your loan payments automatically every month, paying for utilities. So your cell phone, your PG&E, those get paid automatically every month, ideally. And mortgage, can get paid automatically. There's even some places where you can pay your rent automatically each month. So we talked about those periodic expenses, right, a couple slides ago. Just to give you more examples, those are things like your insurance premiums, your property taxes, holiday gifts. If you celebrate Christmas and you want to spend $600 every year on Christmas, that's $50 a month that you can save into a dedicated savings account for Christmas. Vacation, if you want to take a vacation every year, and let's say ideally you'd like to spend $1,200 a year on vacation, that's $100 a month that can go into a dedicated savings account for vacation. And then the savings, this important piece of paying yourself first. So the first thing you would do is set up automatic payments into your cash reserve, which again, some people call emergency fund or rainy day fund, that you're really trying to build that up to 6 months of your expenses. Save automatically for retirement, whether that's you're doing it through your work or you're saving automatically to an IRA every month, or for college savings, you're saving automatically to a 529 plan every month. We already talked about debt payments above the minimum required count towards savings. And then I've told you, I'm going to say this many times, ideally 20% of your take home pay goes to savings. But if you can't do that, which many people can't, just start out with 1%, but that's all you can do. Even if it's just a little bit, you're trying to start the habit and then you're going to build it gradually. So that's kind of how automation helps you have money for the things you need to have money for, necessities and savings. And then it's all the other stuff that you spend money on that really should only be 30% of your take home pay. That's the stuff that you can really work on to reduce that so that you're not overspending on your discretionary stuff. So I'm going to talk about 5 different ways to reduce your discretionary spending. I'm just going to list them here and I'm going to go into detail on each one. So one is using mindfulness tactics. Next is using delay tactics. And then we're going to look at using all the stuff you actually buy, planning out what you buy, and then eliminating some recurring charges that you don't really use. So let's go through those. So the mindfulness techniques to reduce spending. If you're spending on a credit card, that is a great way to spend too much. So usually people find it much easier to spend less if they're using cash or a debit card. And sometimes I'll hear from clients, yeah, but I'm not getting my miles. Truthfully, if you're overspending, you're going to be so much better off not getting the miles or the points and sticking within your budget. So if you're having a hard time sticking to that 30% of take-home pay to discretionary, try switching to cash or your debit card, and that alone, it will likely help you. I recommend for everyone, whether you're using a credit card or cash or debit card, I recommend for everyone that you review your bank balance daily, see what's come in and what's gone out. That is really a way to be mindful about your spending. Similarly, if you do use a credit card, review your credit card account every day and see what you spent your credit card on. It's surprising sometimes you'll be like, oh, that's right, yesterday I bought that, I've already forgotten. And now that we can get all that stuff on our phones, it's very easy to review your bank balance and transactions every day and to review credit card transactions every day. That's mindfulness. Next technique is delay tactics to reduce spending. So this is just trying to cut back on that, on our impulse purchases. So if you decide you want to buy something, just have yourself wait 24 hours to purchase it. And that will often eliminate some of your spending. Similarly, with online purchases, get rid of the one click to buy button. That's like a horrible idea. And don't store your credit card or debit card on your computer for automatic data entry. You want to make yourself type that stuff in, type in your address, like make yourself do all that, because it is putting a little barrier in between the thought like, oh, I want to buy this, and then actually purchasing it. You're reducing your impulse purchases. You're also this is another way to bring mindfulness to your spending. Next step is looking at the stuff you already have and using it before you go buy something else. So I think groceries and clothes are kind of the big categories here, where people tend to like go buy stuff and then they bring it home and like, oh, I have something very similar that's just sitting there. So before you go shopping, look in your closets, look in your cupboards, and see if there's something you already have or a close substitute, and use that instead of buying something. And then related to this is if you have unused items laying around, if you've not used those in a month, really those should be returned. And that is just a way of, again, getting yourself to use stuff that you have. Um, and then again, sort of further on this is when you buy stuff, actually buy stuff you're going to use. So if you're going to buy groceries, it should be used within a week. If you're going to buy something other than groceries, really should be used within like 1 or 2 weeks. Like you shouldn't just be buying stuff, oh, just in case I'm going to have this. This is how people end up with like, crammed closets and cupboards with stuff they don't use. I mean, there's going to be some exceptions that I sort of put in here. Like, obviously, if you're going to a wedding, you're not going to wait for the week before to buy an outfit because you might not find something. Or if you need to buy a plane ticket to get to that wedding, you're going to have to buy that, 2 or 3 months ahead of time. But for most things, when we buy it, we should be using it within a week or two. And then I really wanted to mention planning strategies to reduce spending. So I think a lot of times people go out and buy stuff. They've not really thought about what they're going to buy. You show up in the grocery store and you're like, oh, I'm just going to buy whatever. Like a way to really reduce your grocery spending is to do meal planning, to like think at the, on Sunday, if that's when you're doing your shopping, think about, okay, what am I doing this week? How many meals am I going to be eating? Are there some things that I won't be eating? I'll already have a lunch scheduled or I have a dinner scheduled. But know how many meals you're going to eat, or take a good guess of how many meals you're going to eat for the week, and then plan out like, okay, my 7 breakfasts, what am I going to eat? My 7 lunches, what am I going to eat? My 7 dinners, or however many times you eat a day, some people twice a day, whatever it is. Plan it out and then look in your cupboards and say, okay, I have the stuff for this, but I still need. And then from there, you can make a list so that when you go to the grocery store, you're really just buying the stuff that you're going to eat in the next week. You're not buying stuff like, well, maybe I need this or just in case. You're really buying it for the next week. And sometimes for some people, grocery delivery can actually end up saving them money. I don't know if that's true for like Instacart or Uber Eats, but if you do like the Safeway grocery delivery, sometimes you can end up saving money because it forces you to plan what you're going to eat instead of just getting to the store and buying whatever. So keep that in mind. Similarly for clothes, I mean, these really are 2 ways that people often end up overspending. It's food and clothing. So think about planning out your outfits. You can do like a capsule wardrobe where you don't just have a closet of clothes and like, oh, I have nothing to wear. You have, 7 outfits or 10 outfits that you wear repeatedly. That's planning. Next technique to look at is kind of going through all your recurring charges. So you can look at your bank account, you can look at your credit card. What are the things you're paying for every month? Or some things once a quarter, but most things are once every month. So what can you get rid of that you're not really using and I'm going to give you some of the common things. People will pay for a gym that they don't really use. People will pay for cable or apps on their phone or streaming services that they're not using. So maybe you don't get rid of all of those, but you cut back and you only have 1 streaming service a month, something like that. Amazon Prime, people will buy that and not really use it, or maybe it makes it too easy to like just buy all this stuff on Amazon. You might be better off just getting rid of Amazon Prime. It'll cut your spending and you won't have the monthly or the annual fee associated with it. Similarly for Costco can be great for like larger families, but for single people or couples, it might be something where it doesn't really make sense that you have that. You're not really using it. You're paying the annual fee and maybe you're buying too much stuff. Storage units that you don't really need. Non-essential car, if you have two cars, but really you only need one, that's a huge savings. Bank fees, you should absolutely not be paying to use an ATM or paying a monthly fee on your checking account. There are many ways to get that stuff for free, and you should be doing that. Similarly, for credit cards, you should not be paying annual fees on a credit card. There's many ways to get that for free. And if you automate your payments, you can do away with late charges. If you do travel internationally, you should be looking for a credit card with no foreign transaction fees and a bank account with no foreign transaction fees. And then high interest debt payments. This is a way that people end up spending a lot of money. When you look at your savings, you're going to be so much better off directing more to paying down credit card debt so that you're not still paying that. So those are some of the ways to reduce some of your expenses. If you're finding that despite that, you are still overspending, you may need to use envelopes. And what that means is calculating what your take-home pay is, separating out what needs to go to your necessities, so your rent, your utilities, your groceries, separating out what you would like to go to savings, and then you have a dollar amount that is your discretionary spending, and you give yourself that money in cash. You put it in an envelope. This is the old-fashioned way of doing it, and that is the money you spend on your discretionary stuff. And you could do it once a week. You get a dollar amount, or once a month. I usually recommend doing it more like once a week, because if you give yourself a dollar amount once a month, oftentimes by the end of the month you have no money, and the last week is extremely difficult. So that is a way to really guide your spending if you need that. And then I do kind of just the last couple slides are just some various things I'd like to just talk about. There are some easy ways that you can get some passive income and get some discounts. So when you're shopping, consider using these ways. You can get cash rebates by making your online purchases through something like Rakuten. They give you, depending on the store, you get anywhere from like 1 to 10% back. You can earn a great way to earn some passive income is to get more interest on your cash by using a high yield savings account. There are many out there. I commonly recommend Ally, CIT, or Synchrony, but there's many out there. There are many credit cards where you don't pay an annual fee, but you can get 1 to 2% cash back. I recommend that. You can get shopping discounts if you use something like the Capital One shopping browser extension. There are also others. And then you can get a tax deduction on medical expenses by using a health savings account, and on childcare expenses by using a dependent care account. So those are just some couple things that I recommend. And when I was talking about using the envelope method, sometimes people will say like, oh, are there digital tools I can use? There's a Good Budget, which helps you set up digital envelopes. That's actually an app you can use, and it's free for most uses. There's also a paid app called You Need a Budget that does some of these envelopes. That can be useful, but you do need to pay for it every year. Or you can just set up a spreadsheet if you want to track your income and spending. You can do Google Sheets or Excel, something like that. And then kind of the last thing I want to talk about is that many of you will be managing cash flow as part of a couple. So I had talked at the very beginning about making sure that each person in a couple has a little bit of fund money that they get to choose how they want to spend it every month. And the next step is sort of like, if you are managing cash flow as a couple, that you set aside time each month where you sit down together and talk about your cash flow together. So, schedule an hour and have coffee with it or, something like that. And just sit down, look at your bank statement for the last month, look at your credit card statement for the last month, review what you spent over the last month, and then talk about are there big expenses coming up in the next month and how are we going to handle those? And reconfirm the priorities that for what you both want to spend together. And just again to confirm that this should not be talking about your own individual fund money. You should be able to spend that however you want. This is your joint money. How did we spend it? Like, oh, wow, we spent a lot on groceries this month. Like, what can we do going forward? We're not spending so much. Or, oh, coming up this month, we have, it's graduation season. We're going to have to make a graduation gift to our niece or our nephew. How are we going to pay for that? Where's that money coming from? So that's what that monthly cash flow meeting is for. Annually, I recommend an additional meeting once a year where you sit down, you pull out the statements from all of your accounts, so in all of your insurance policies, and you look at them and add up your assets, add up your debts, and see what your net worth is once a year. And obviously the point is to grow that each year. And I do recommend the last bullet point there is oftentimes in couples, one person will end up being the one who pays all the bills and keeps track of the accounts. You want to make sure that both people know how to pay the bills. And it's not just to share the burden, but it's also knowledge. You want to make sure both people know how to pay the bill. Both people know where all your accounts are. That's really important. And then the last thing I just want to leave you with is how you spend your money shows what's important to you. So spend with a purpose, spend with a plan. Don't just let the spending happen. And lastly, I'll just do another plug for Advisors Give Back. I have a financial planning practice in Oakland, but I do work every week with Advisors Give Back. I do pro bono financial planning. And I really recommend, if you have specific questions, you want specific advice on your current situation, that you go to Advisors Give Back and sign up for, it's all provided for no charge, and you sign up for a personalized advice session with an advisor. So I'm going to pause there, and I'm going to look at the Q&A. I think I need to stop sharing in order to look at the Q&A. So I'm going to do that.
And thanks, Alicia. I want to remind everyone, now is a great time to put your questions. We have an expert here today. So if you have any questions, things that you've been wondering about for a while, this is a good opportunity to get those addressed.
And someone I'm seeing in the Q&A, this was another great way to get some, you could call it passive income or some extra income. If you are lucky enough to work for a company that matches your retirement contributions, then you want to make sure you contribute at least as much as what they match and maximize that. So that's a great reminder.
Maybe we can give folks some time to, think about their questions. Alicia, would you maybe talk a little bit more about like Advisors Give Back? Like what can people expect when they sign up for that? Like what kind of stuff do you work with people on when you're meeting with them?
Okay. Yeah, I mean, we work literally on anything that is affecting your personal finances. So the way it works, you'll go to the website and you'll sign up for for an appointment with the financial advisors, and there's a range of appointments. So you can kind of pick the date and the day and time that works for you. And when you first meet with someone, your first meeting is it's a half an hour, and it's just like they'll kind of go through what is your main financial question or concern right now, and you'll fill out a little form when you request the appointment. So it can be anything. It can be cash flow, like we talked about today. It can be, how am I going to retire? How am I going to pay down my debt? How am I going to pay for college for my kid? Am I ever going to be able to buy my own place? Really can be anything. Like, I have an elderly parent. How do I take care of them? Like, anything. I want to get a car. How do I buy a car? What should I be looking at for car insurance? Anything at all. Health insurance, anything. We cover it all.
And it can be ongoing, right? It's not just that first meeting.
Yeah. So you start out, it's a half-hour first meeting, and then, depending on what your situation is, we absolutely then do follow-up meetings after that.
That's great. I know in a lot of our programs, people have very specific questions that, it's, I think, hard in these programs to answer them because the presenter would need to know a lot more about your financial situation. So I think this is a good opportunity for those kind of questions. You can get into more detail with someone to find out, to get the help that you need.
Yeah, that's right. I mean, I think you'll read like stuff online or in the paper, and it'll say, oh, you should have like $20,000 in your emergency savings. Well, it depends, right? Like, if your expenses are $2,000 a month, you don't really need to have that much. But if your expenses are $10,000 a month, you should have more than that. So most of the stuff really depends. It really depends on your specific situation. And so Advisors Give Back lets you get very specific recommendations for you.
That's great. So everyone, if you haven't, go check out. I put the link in the chat. It's a really good opportunity. The library is really happy to be able to work with Advisors Give Back. So please check it out. I'm not really seeing many questions. I can relay a couple questions that we get at our department a lot. And you mentioned digital tools. You gave some examples of ones that are available. In general, what should people be looking for? Because there's so many of these products that are offered. Like, what are just some basic things that everyone should think about when selecting a digital tool, or before maybe purchasing one of these products? Do you have any guidance for that?
Yeah, I mean, I think I would recommend initially going with one that, this is true of just about everything, going with one that doesn't cost. So if you really are looking at doing something digitally, like, I would look at good budget first, because you can set stuff up and not pay for it. And then it's just going to depend. Like, you're going to have to try it out and see if it works for you. It just doesn't work for everyone. And you're going to have to just sort of play with it and see. I think a common question I'll get with these apps is that, is it okay if they import your bank account data for you? And it is okay. It can feel a little weird, like, oh, I'm giving them permission to have access to my bank account information. But if you're using a good budget, or you need a budget, like if you're using a I mean, I wouldn't just give it to some random person, but if you're using one of these um, high quality apps or websites, it's okay. The way it is set up, they can't really get into your account. They're just pulling in the transactions to your account. So I think sometimes that makes people feel nervous. And if it does, then you can enter the transactions yourself. You don't have to do that. Yeah, so there's the slides. I'm just getting a question here. The slides are all going to be emailed out to all of you.
Yeah, later today, I will send out a follow-up email that has a link to the recording, a copy of the slideshow, and also a very brief evaluation survey. I'll do a quick plug for that right now. It takes like a couple minutes. Please fill that out. This is how we improve our programs and pick new topics. So if there's something, like a personal finance or even beyond personal finance, some topic that you would like to see a presentation on, let us know. And, we work with our experts to find someone who can address that topic. Alicia, another question that we frequently get is, people recognize the importance of savings, but, especially in this, this part of the country, it can be really hard. A lot of people live paycheck to paycheck, feel like there's just nothing left at the end of the month after paying their expenses. What kind of advice do you have for people who feel like they're in that situation?
I think the main one I would say is the paying yourself first that I mentioned in the presentation, setting up an automatic transfer every month into a high yield savings account and really start out with 1%. Just start out with 1. And if you can do that, bump it to 2 and so on until ideally you'd be doing 10% into a high yield savings. That's the ideal thing. I think that's a big way to do it. I think for people who are really struggling with spending, you can set up 2 checking accounts, have your paycheck deposited into 1 checking account, and from there, do that automatic savings I just mentioned, and then give yourself an allowance into a second checking account so that 1 checking account is untouchable except for your bills, like your rent and your utilities. And then another checking account is the allowance you give yourself so you can spend it on whatever you'd like. And that it's just a way to organize your finances so that you always have money for your bills and you are automatically saving to a savings account every single month.
Another thing we are asked, I was going to ask about high yield savings accounts, but it looks like we have a question here that might be touch upon that.
Yeah, someone just mentioning they get their credit card rewards and they transfer them to a CD. So it's just an automatic way to save. That's a great way to do it.
And then, when there's CDs, maybe you have a savings account that you've used for years, but you realize that you're getting like 0.01% in interest. What do you do? How do you go about finding a better deal? Do you have any guidance on that?
Yeah, so I had mentioned in the slides, there's Ally, CIT, and Synchrony. Those are kind of the 3 that I usually recommend to people. But if you're ever looking around, you can actually go to bankrate.com and they have a list of high yield savings. And you'll find those 3 on there. But if you're just want to look at others. That's a great way to do it. And they're almost all will be online, and that's how you get the higher interest rate. So your local bank is not going to, it's very unlikely to give you an actual high yield savings. Even if they call it that, it's not. And on top of that, they're often charging you a monthly fee. So it's really worth it to get an online high yield savings. You can link it back to your regular checking account. So if you need to transfer money, you can. But it is really the online high yield savings that give you those higher rates. I also think, that's another thing that sometimes people will say, oh, I feel worried about doing this online. I think that's another reason why if you go to Bankrate and look at who they recommend, if they recommend someone, it's okay to use it. So again, Allies, CIT, and Synchrony, those are all perfectly stable banks to use. And you just want to make sure it has FDIC coverage, and then you're safe.
And then it's fine. Like when banks don't have a brick and mortar, that's not a reason to be concerned or anything, right?
It's totally fine. Yeah. I mean, honestly, most people at this point don't need a brick and mortar bank, and you are paying for that. So most people don't really need that.
Do we have any questions out there from the audience? Sometimes we get a very last minute one. Yeah, thank you so much, Alicia. This was a really valuable presentation. I think it's helpful to think about like our mentality towards money. And you talked a lot about that because a lot of our behaviors related to money, we just do it without thinking. So it's good to be mindful of these things, and then to go in armed with some of these strategies that you provided. It's very helpful, and I think we appreciate you joining us today to help us with this, and to provide this valuable information to our patrons.
Well, thanks. Happy to be here.
Let's see. Got a couple things in the Q&A. Kirsty was thanking you for the high yield savings account recommendations. And then Andre was asking just about the definition of cash flow.
Cash flow is just the money you have coming in and going out. So it's your paycheck if you work for someone, or it's if you're self-employed, it's what your customers pay you. So it's your income coming in, and then it's whatever your expenses are.
Any other questions out there? Well, if you think of something right after this program, and you can always reach out to the library. We are not financial experts, but we are really good at connecting people to resources and information. So feel free to reach out to us. I put all of our contact information in the chat. That will be included in that follow-up email later today. It looks like we have a comment in the Q&A. Thank you kindly. I dragged my granddaughter to this.
I'm a good grandparent.
Yeah, hopefully it's valuable for multiple generations. Thank you for the comment. All right. Well, again, thank you so much, Alicia, and thank you all of the attendees who joined us today. Keep an eye out for that email that I will send later this afternoon. And then, always feel free to reach out to us. And if you'd like more sort of hands-on financial guidance, check out Advisors Give Back. You can meet with a really knowledgeable financial planner like Alicia. A great opportunity. All right, everyone, go outside, enjoy some sunshine today, and we hope to see you at the next event.
Bye-bye.
Take care, everyone.